Hey, what's going on, guys? This TerrenceRe, and I'm back at you with another stock market update. Got another episode to give me a chart where I'm just gonna be going over some charts of the main stocks coming up, or what I see anyway. All right. So without further ado, let's get right to it. The first stock I do want to take a look at is AMD, and you can go look at last week's video. You can see last week's video we were right up here, as this was Monday, so that would have been, let's see, so the 23rd was Friday, Thursday, Wednesday, then we got Tuesday, and then see Monday there wasn't any trading. So here we go. So we would have been right here last week, and you see we had a little doji candle and it continued down. I talked about a possible filling of the gap, and you see it came down and filled this gap. Now, in my opinion, this is a perfect place to trade AMD. Notice I said trade. Now, I don't know what direction. Nobody really knows, but you see it came back and filled the gap. And after these, what, 1, 2, 3, 4, 5 red candles, we get a green candle and we got a little wick right here. So my thing is, if you're bullish, this would be a perfect place to get bullish, right? Um, if you're bearish, obviously it would have been better to sell here, but you may be neutral. So this isn't a bad place for, in my opinion, maybe uh could be a strangle, an iron condor. They have to look at the IV rank to see exactly what IV is telling us. Let's take a look. Let me pull up one of these just to see. And I'm just want to see, and I got it up here in the corner. So it has a low IV rank. Now what that's telling me, and a couple things by me pulling up these indicators, you can see that my stochastic. Now I have a different settings for my stochastic, but based on the settings that I use, I imagine any of them that you put up here is oversold, right? And so this may not be a bad place for a bounce, even if you don't get a giant up move to take out the high. It could chop some, but I suspect we might see a bounce or a little sideways action. And so it wouldn't be a bad place to trade if you want to get bullish. I think that, in the whole grand scheme of things of buying high, of buying low, selling high, which is relative, this would be, in my opinion, a low to be buying into, right? This would have been a high, obviously hindsight, but right here, filling this gap right here will make, in my opinion, some type of support. As you can see, it held on Friday, so we could see a little sideways or a little chop. And I do think the AMD will continue higher. I have another level up still. I still think it at some point it's going to reach 140, and I think it'll reach 140 before it breaks this low. So I could see a little chop, do a little dance, and then maybe in a week or so we push higher. And let's see, let's take a look at Tesla. Excuse me. Now, Tesla is something that I am currently in. I've been trading in and out, and I do think that now the position that I'm in now, I'm down because I purchased a call option sometime last week. But this particular trade, I went out like 90 days. So I'm out, or 80. I'm somewhere out in September. And if I do believe I bought the 280. So I'm out here somewhere, right? So I got a long time to sit with this option to see. I do think that Tesla is going to continue higher. My overall thesis is that it makes it to 300 at some point, right? Within the next month or so. And I gave myself some time. I go out in time and buy a call option further out in time. The reason why you do that is so you're not so susceptible to theta decay when you buy a leap. So that's sort of like a leap option. Now, looking at this, it is overbought, right? So it looks like we're gonna get a down move. Um, Not necessarily. So I didn't want to try and time it, and you can see that it's just been beasting to the upside. So Tesla is one of them stocks that some news could come out and it could just take off, and you can get a big green candle like right here. So I'm a little bit less certain on what direction it's gonna go next week. And it does the great thing about Tesla is that you have an IV rank of 34, and with you having an IV rank of 34, you can sell premium in here. So you don't necessarily have to pick a direction, right? If you're comfortable, yeah, everything's in play in Tesla. Selling strangles, selling puts, put spreads if you want to define the risk. But ultimately, like I said, I think that within the next month or two, I think Tesla end up right around 300. That's my last level. This next one up here, I don't normally trade that. That's not a Fibonacci expansion level that I normally trade. I normally look for the reversal around in this range, but I do think that it'll get to the 300. Now you may see over here, you see I got some Fibonacci's too, because these ratios are all different time frames. So I do have like an intraday range that I had been messing around in, right? I won't give too much analysis on that because, like I said, I rather, for the purposes of this show, we stick with daily candlesticks, right? Stay out of the small time frames unless you really experienced and comfortable with losses. Yeah, you can make a little money trading intraday, but it's really tough. So um, getting with a trend on a daily time frame and just sticking with it, to me, is the best case scenario. And looking at this, if you see it's still going up, that's why I don't want to try and time it. Of course, Tesla could come back, come down, and then fill the gap, right? Just like AMD did. But the only thing that I like is that AMD already filled this gap, right? And you would say, well, what does that have to do with Tesla? These are in the NASDAQ. And with them being in the NASDAQ, they tend to kind of move together. So if we see AMD make a move, then I would suspect that NVIDIA would make a move, right? I talked about this divergence last week in NVIDIA. And it looks like it, like this week, it just kind of went sideways, right? So I would like, you see how NVIDIA got another level to go hit. You see how I got some more levels in AMD to go hit, and then Tesla. So if I see AMD going up, you just got to kind of, now Nvidia is 4 times the size as far as like costing, like as far as dollars, right? Nvidia is 422. So you may not want to trade. You may want to trade the smaller version and go with AMD, right? You may make more money if you trade Nvidia, but you're gonna have to put up more money. It's just a larger stock at this point. So I kind of look at stocks that move together or in the same, like, or in similar, um, markets. So with AMD and Nvidia being chips, Tesla not necessarily a chip company, but they are considered a technology company. And I do believe, someone can let me know, I do believe Tesla is working on their own chips or something like that. So they kind of move in tandem. Let's see, Microsoft is also, look at this. Now you see this channel right here that Microsoft broke out of. Now look at AMD. See that channel? So you see how so if you see one like kind of moving up or having a big day, generally they will all move these big stocks. And I'm talking about like mainly Meta, Apple, Amazon, Google, Microsoft, Tesla, Netflix. And then you can throw Nvidia and AMD in there. That's why I have them on this watch list. I also want to take a look at, let's pull up Netflix chart. Let's just take a look at what Netflix Netflix already crossed over on the MACD. You can see, but it ain't really. So that's what it's not really tearing off to the downside, right? So it's not like it's like beasting to the downside. I don't have I don't have me personally any conviction that this is just gonna barrel downward unless we get some type of news event. It's gonna take some type of catalyst event, some type of event to act as a catalyst to shift this market back down. So I think, in my opinion, you look for dips to buy in this type of market, right? Or if you're familiar with covered calls and you own the stock, when you just sell calls against your current position. When it gets to an overbought state, sell those calls against it, and then as it comes down, buy into the dips, right? Or if you're not comfortable buying individual stocks, you can always do the QQQ. Now look at this channel, right? You see this channel right here in the QQQ. Look, they all look like they in channels, right? Look at AMD, right? Well, what was the other one? Microsoft. See? Now when we come back to the QQQ, which is an ETF of the technology companies, you can see it was in a channel as well. Now I don't have a um any levels for the QQQ, not on the daily chart. So it's just been moving up. Now I do want to talk about the SPX, right, which is the S&P 500. Before I do that, let's go back. Before I go, let's go in. Well, let's look at the 2 year. The 2 year. Let's look at Treasury yields. And you say, well, why look at Treasury yields? This is like so when you're doing it, trading or technical analysis or whatever it is, like you're looking at charts or you in fundamental analysis as well. Generally, when the 2 year is going up, basically, interest rates, right? Interest rates are going higher. You're gonna get the 2 year Treasury yield is gonna go higher. When you have that, what tends to happen, not always, is you'll see like tech going down. So that's one of those things that you can look at. That's generally what happens. It's doesn't happen all the time, but generally when we see, and you can see right here that the yield started to go up, and then we started to see, you know, the Nasdaq starting to turn around a little bit. So that's just one of those little things you look at. It doesn't always work out that way. And of course, when you see the 2 year and the 10 year going up, you should see the bonds coming down. So the bonds in the 2 year kind of work like so if we think that the bonds are going to go up, then we would be bearish on the 2 year. So that's just kind of, you know, and this part of the curve is the curve that's affected the most by interest rates by the Federal Reserve. The 30 year I don't really look at because they don't really control too much of that. There you're gonna see when you see the FOMC meetings and you see Jerome Powell come out and talk, and sometimes he's trying to talk the market a certain way. This is what he's controlling with his mouth and with interest rate hikes or cuts. It's that 2 year, 10 year that relationship right there. So, so I keep that on there just to kind of look at. And you notice how on Friday, and I'm doing this on Sunday. You see on the Friday previous, you see how 2 year, 10 year were down, and you come over here, you see the bonds were up. So we had a green day in bonds, red day in the yields. So that's just something else that you can kind of look at. Even if I didn't have a chart, I can kind of look at my watch list and kind of tell what the market is doing. And you look at the futures right here. Here go the bonds, the ZB/ZB/ZN up or green day. And then we had equities looking at the futures market down. And then we got the volatility futures were up. So that's a classic. Like I can tell the equities are down, bonds are up. So if you're a premium seller, you see vol is up, then generally try to come in and sell some junk, right? Sell some options somewhere. We even had a green day in gold. Now, what I did, the last thing I want to take a look at is the SPX, right? I hadn't been talking about it too much, but I do have a target for it. So let's go take a look at it. Above, let's take everything off. Let's just go naked chart. Now, we see we got like a little triangle coming to an apex up here. And you see last week it came stop and hit right here at a fib level, right? We even got a wick right there on the level. Now, I do think, now this is just my humble opinion, we may get some chop. I don't know. But at the end of the day, I got another level for the S&P 500. I do think it will get up around this 4,800 level before the end of the year. And with that being said, so this is what I did. Now, the S&P 500 kind of moves with the NASDAQ, the Dow, even the Russell to a degree. They move with one another. Excuse me. As you can see, the Russell hasn't been moving with the NASDAQ. NASDAQ is beasting all year, you see. And then you got the S&P 500. Now, when we look at the IWM, the reason why you had this big down move in the IWM, we got to understand that the Russell 2000 has banks in it. It has your regional banks. So this was the move when we had the banks collapsing back in March. So that took it down. What generally happens is this is the more volatile out of the four. You got S&P 500, NASDAQ 100, the Dow 30, and then you got the Russell 2000, which is this. The IWM is the ETF of that. It's the more volatile out of all four. And it generally will give us a reaction on which way it's going to go. So, the four this one to go first for the most part, not all the time. So that's something else that I look at. The SPX, like I said, I got another level on it of going about 4,800 by the end of the year. So what I did was currently I've been holding the diamonds, the DIA, the ETF of the Dow. It's not moving as fast as the rest of them to the upside, so I sold it. I own that in another account, so I sold it in a longer term portfolio. Sold out of it, and then I bought the SPY, which is the ETF of the S&P 500. So this is something that I'll look to hold until it gets to this level. If it doesn't, now if I see something happen in the market and it's barreling down, I will sell out of it, right? I was just you don't have to sit, especially in a retirement account or something that you trade for your retirement. Um, this is a ETF, so it basically giving me access or exposure to the whole market, and it pays a little dividend as well. And then if I have a sell off in the market, either I'll sell out of it or I'll trade something else on the way down. I'll try to hedge it, right? So that's what I wanted to talk about. I do have a level in the S&P 500, and with me having a bullish, say so in the or a bullish, I don't know, what's the term I'm looking for? Um, I have a bullish opinion of the S&P 500. That's gonna give me, because all of these stocks right here are in the S&P 500. So for the most part, that lets you know that I have a bullish stance on the market. Now you would be saying like, man, with all this stuff going on, how could you be bullish the market? Because it's going up. Look at it. It's just going up. So you turn on the news, you think that hell is getting ready to freeze over. And it may be possibly I'll wait till it start freezing. But right now I'm gonna stay long. Um, and then you just gotta be nimble enough to first of all to say like, hey, I'm wrong. And realize that you're wrong on your thesis and then sell out of the position. Something else while I'm looking, I'm gonna show you. After it took out this high right here, check this out. You guys see this? Boom. So that this may act as support. You can see it took out this high. It's coming back to test this area right here. See this high? It's coming back to test it. Let's see what happens this week. I wouldn't be surprised if we got a little bounce. I would, if it comes in here, let's see, maybe Monday chops around, and then maybe Tuesday, Wednesday, boom. So let's just see what happens. Hey guys, if you got something out of this video, remember to hit the like button, hit the subscribe button, and share the video, comment, let me know what you think, and let me know what stocks you got on your radar. And with that, guys, I'm gonna be out. Peace.